Welcome back to Civil Discourse Now. I am not Paul Ogden.
And I'm not Mark Small.
And we're neither one of us. We are here on an absolutely gorgeous morning, August 18th, 2012.
Afternoon now, Mark. It's afternoon.
It is. It's 12:06.
Exactly.
How do you know what time zone we're in?
Just a wild guess.
We're in Indianapolis, Indiana, Broad Ripple, which is on the north side of the city.
Undisclosed location.
That's true, an undisclosed location. But we're discussing privatization, and this was something that we just started talking about this morning because
I have an interest in privatization. I used to be being a Republican, being conservative. I was a huge fan of privatization. Read books. There's a classic book out there called Reinventing Government. I think it was from the 1993, where the authors, and they weren't necessarily conservative people, but they had an idea about how to reinvent government, and that was to take services normally done by government employees, by the public, and turn it over to the private sector, give them short-term contracts, have these companies compete against each other. The classic example is garbage collection. Instead of having government employees collect garbage, you turn that over to a private company and have them do it.
So you're a reformed privatization advocate.
I went back and looked at the books, and one of the things that they didn't talk about was the danger of long-term contracts. They envisioned a company not doing a good job, swap them out, put another company in. In fact, they envisioned, using the example of garbage collection, that you would have a major contractor and a smaller contractor. So you'd have a major contractor doing most of the garbage collection in Indianapolis. You have a minor contractor doing some of it. Then if the major one screwed up, you could switch over to the minor.
So you'd have competition.
Competition, exactly.
But
doesn't work like that at all.
No. In fact, I think the Indiana Toll Road, as an example, is a 50 or 75-year?
I believe it's 75.
75-year lease with a big chunk of money up front that now is gone.
It is, I believe, gone.
It's all gone. That means that the politicians who bring in the privatization contract get feted, get wined and dined, and enjoy themselves while they're looking over the contracts, and get a lot of money up front, give the appearance of having balanced the budget, and then when they leave office, there's no more. That's a capital asset that they've just given away to a Spanish or Portuguese company.
Yeah, we have squirrels running around the tree. It's pretty funny.
They've come over to my side now.
Oh, yeah, okay. But what you have are politicians of today mortgaging the future. They're getting money up front that they can spend that the people in the future will not have that money because we're selling off or doing long-term leases of these capital assets. Yeah,
and what they're getting is relatively small change up front for the contract. I mean, they made a big deal about $3 billion that we're getting for the Indiana Toll Road. There was a reason why a company was willing to pay that much up front. It's because they're looking at 75 years for their lease. They're going to make a lot more than the $3 billion. And so a wise or prudent political leader would have looked at that and said, how can we improve the means by which we do business so that we can save that money that otherwise is just cash up front for selling out?
And their argument was, well, we haven't raised the tolls since the 1970s on the toll road, and it's just not politically popular to raise the tolls. And we had a similar thing here with the parking meters. We hadn't raised the parking meter rates in quite some time. And the only thing, and we had older parking meters, and they said, well, we can bring in a company, spend $8 million on new parking meters, get some cash up front. It wasn't terribly a lot. It was like $20 million. And we can let this company, ACS, I think we mentioned the name, get 70% of the revenue off of these parking meters and off the parking tickets for the next 50 years. The problem is that ties the hands of future generations. Plus, if this company's not doing a good job, what do you do?
Well, there's a buyout provision that really is a penalty to the city if they want to get rid of the company for doing a bad job.
Yeah, they because of complaints about the 50-year contract, they put 10-year buyout provisions in. The problem is they made it so you could never actually use those. And not to get into too much detail, but first of all, you had to give them a year's notice that you're going to use the buyout provision. You had to pay them off what their original investment was. Probably the worst thing is you had to agree to accept the revenue that you're getting today in whatever, if it's 2030, you have to agree to take the revenue from 2010 or 2011. And no company coming in will do that. Another thing is you can't borrow the money to pay them off. They actually put a provision in there saying you can't borrow to pay the company off.
That is a very odd provision.
It is an odd provision.
And that's why I park in the parking garage when I go downtown. And parking garages downtown, incidentally, are owned by
the same company that's involved in the parking meters.
Yes, but I don't have to worry about...
They're one of the partners in the parking meter.
They're one of the partners. I don't have to worry about a parking ticket that way.
Right. But they've been able to raise the rates at the parking garages now because the rates at the parking meters have increased.
And instead of having meter maids or people walking around, they have parking ambassadors.
They're ambassadors. Very nice people.
Yes.
Oh, and I should raise this because I ran into it yesterday. The kiosks, they call them kiosks, where you put your money in for several parking spots, they're not coordinated, or they don't talk to each other. So you could have put money in a kiosk for 1 meter, and then you go to another kiosk, and it will show that there's no money in there, that there's no time on there. So if you are 3 blocks from the City-County Building, you put money in, and then you come out at a meeting at the City-County Building, maybe to put more time in your meter, and you go to just another kiosk.
It doesn't work that way.
It doesn't work like that.
Oh.
So,
long-term contracts, what they're wanting to do in terms of privatizing the lottery here in Indiana, a couple of things. One, apparently the same management company that selected Illinois or managed Illinois' selection or the way in which they did the bidding process over there is the same company Indiana is using.
See, I'm a little confused by that. So there is and you've read the article in the
Yes.
Indianapolis Business Journal. So they hired a company to select the vendor
To be administrative over the bidding process and choose the vendor, yes.
So they're not actually going to be part of it once they choose the vendor.
I'm unclear about that because they're talking about only some functions of the lottery will be let out.
What are those functions?
I don't know. They're talking about the vendor will do sales and promotion, but you got to believe that they're putting up a chunk of change.
Oh, yeah.
They're going to want the sugar. And the contract is for 15 years in Indiana. Illinois has had horrendous problems with their situation. In fact, one person said, "Didn't Indiana learn anything from Illinois?" No. Yeah. I mean, it just doesn't work that way. And one of the problems is that a penalty provision was put into the contract in Illinois, whereby if the company didn't hit a certain number on sales, they'd pay a penalty. Okay, that makes sense. If you're making promises that you're going to do so much in sales, so much better than the way the state can do, and if you don't hit those numbers, well, then you pay a penalty. It makes sense. Somehow that got flipped in the way the contract was worded, so that the state's paying the company millions of dollars for the company not succeeding. That does not make sense unless you're writing the contracts for the company, right, and the state doesn't disclose the contents of those contracts to the public. And to it's my understanding that Indiana is not disclosing the contracts to the public that are being proposed.
Well, and there you get into the open records law. The open records law in Indiana is pretty broad, but there's an exception for when you're like negotiating or when you're bidding on.
Or what about a quasi-governmental agency, which the lottery commission is?
Actually, there is. You have the regular open records law, but there's an open record law for like contractors that apply. Like CCA would have to open its records. Now the trouble is, while we have some decent open records law, we don't have any enforcement of it. you have a public access counselor who doesn't have any real power, and courts don't really deal with those on a regular basis, and they don't know how to do it. So a lot of times you have agencies and quasi-governmental agencies that'll drag their feet. But there was a case that went to the Supreme Court where ICVA, Indianapolis Convention and Visitors Association, tried to prevent someone from getting their records, and they're a quasi-governmental entity, and the Supreme Court 5-0 said they have to turn them over. So.
In terms of this whole thing, in terms of privatization and selling capital assets,
Yeah.
capital assets are things that the taxpayers already bought
Yeah.
and for which the taxpayers paid. We already bought and paid for construction of the toll road, for example. Or another example is right now, we bought and built the City-County Building in downtown Indianapolis. They're talking about selling the City-County Building or renting it?
Turning it over to a private management company. And I'm not real clear on how that, I don't think it's actually, we actually, I think, now own the building. Because we had a building authority that owned it. But we did some kind of quitclaim deed or something. I think we own it now, but they did that with the purpose of turning it over to a private manager, and we had to do that in order to turn it over to a private manager. And the building authority was managing it. There's once again, a quasi-governmental entity that had owned the building was managing it, and we had an option to actually buy the building or to take ownership of the building. And now we've taken ownership of the building, as I understand it, and we're talking about turning it over to a private manager to run it.
Now, in all these transactions, we've bought the thing, we've paid for it, and we're giving it to somebody else.
Yeah.
And we're doing it in the name of efficiency with the idea that that company is going to be able to run it more efficiently, but you put in one big chunk of overhead on that private entity, and that's taxes.
Right.
Because we don't pay taxes for operating the lottery. We're taxpayers, and that's a quasi-governmental entity, but the money that the state makes off of that lottery, there's no percentage of that paid to the federal government, for example, in income taxes. But the company that manages
the state doesn't pay, but if you're a winner.
Oh, if you're a winner, yeah. But I mean, the state doesn't pay.
You don't have to pay state income tax. You have to pay federal income tax.
But and by the same token, if somebody, the company that purchased the toll road, any tolls that they bring in, they have to pay an income tax on it. That's a big chunk of overhead that you've added there.
It's true.
And how can you then argue that they're going to be more efficient when they have this added burden, unless you're going to say, well, we shouldn't tax them. Let's give them the asset, let them run it, and not tax them.
With regard to the toll road, one of the reasons why it was so long was because if it is a really long lease, we have a guest to the program.
Hi there, buddy.
We have a right-wing squirrel, I think, has just entered the
deck.
Buddy.
How you doing?
So, one of the reasons why we did such a long lease is there's some quirk in the IRS rules that say if it's a lease, long-term lease, it's treated as a sale.
We're at the end of this segment. We'll be right back.